Welcome back, viewers and listeners. On today's episode, we'll be exploring if you should buy your next properties either in a limited company or stick to buying them in your individual name. Right, let's get stuck right into the video. What's happened in the last several years, I think it was around 2017, is the government's realised that property investors and entrepreneurs are making a load of money essentially, and they wanted a slice of the pie. So what they decided to bring out is this law called Section 24, and essentially it means as an individual you'd have to pay a bit more tax compared to how it used to be before. But before we get into the specifics of this, we're going to explore the plus points, essentially the pros of having a limited company and the cons of limited company, or the pros of being an individual investor in property. What's great about having a limited company is that you only have to pay corporation tax on all the profits you make, which is quite different to the higher brackets of income tax, which can go 40-45%, right? But it's much lower for the corporation tax. And to touch back on Section 24, as a limited company, you're able to essentially expense all of your mortgage deductions, including the interest, which you cannot as an individual. You can only, essentially you cannot deduct the interest payment on the mortgages as an individual since about 2017. And finally, everyone hates inheritance tax, but having a limited company could mean that you minimize the tax paid in inheritance, or you might get rid of it completely. That might all sound very well and all good, but there are some minus points and some cons to having a limited company. Firstly, if you want to take the money out of the limited company and use it for your daily expenses, you're paying tax on it twice. So you got to pay the corporation tax on the profit once a year, and then when you pull out the money at the company, then you got to pay personal tax on top of that as dividends, or even if you pay a wage, that's again income tax. Also, getting a mortgage on a limited company means that you're going to have to pay higher rates and higher costs. It's just the way of the market. It is getting a bit better as times are going on, 3 years on now, but it's still not as good as an individual at the moment. Another thing to consider is that having a limited company compared to doing personal taxes means that you have a bigger accountancy cost, which you do need to consider. It's not huge, but because there's more paperwork and similar things, the accountancy costs can be more. Look, those are the sort of general ones that a lot of people talk about, so I wanted to cover the main points there. Now you know the pros and cons. How do you decide which one you should go for? It really depends on the person you are, your situation, and what you're looking for from property. If you're just looking to top up your monthly wages with a property and maybe take home another a grand or $2,000 on top of your wage, then and you want to use the money instantly, then I would say the limited company may not be the most efficient way, because realistically, when you take the money out, you're paying tax on it twice. And it's more effective for people that want to keep the money within the company and use it as and when, etc., depending on their life. Another thing to consider is having a limited company really affects the people in the higher tax brackets to really utilize the benefits of it. This means essentially if you're rich, or you plan to be rich in the next sort of 10 or 5 years, then having a limited company is probably the best way. However, if it's the opposite and you think you're going to be working within the lower tax brackets most of your life, then I would not recommend sort of getting a limited company. It just wouldn't work the best, or it wouldn't be as efficient for you. And last but not least, touching back on the inheritance tax sort of area, if you're looking to pass on your portfolio to your children or somewhere down the line, then having a limited company is going to save you on tax when we get to that point, when you get to the older ages. However, if you really don't care what happens to your portfolio after you pass on, then stick to the individual. But disclaimer, I'm not a financial advisor, and before you make any decisions, please talk to one or an accountant and they can help you out. I'm just sharing the knowledge I know and what I've taken of it. That was a quick and short video for you guys to hopefully answer some questions you might have had and give you the general gist of why people choose limited company and individuals. Personally, I buy my properties within limited companies. It works better for us, and I only did start investing after 2017. There is also ways on moving stuff, if say you've bought all your houses as an individual and now you wanted to move them into a company because obviously it works better for you, then there are ways. I will make another video. I need to confirm all the information from a colleague of mine, and I'll make a video for you, and I hope that helps. Again, I hope you enjoyed the quick straight video. Please like, comment and subscribe. It goes a long way for Keystone Ventures and myself, and I'll see you next time.